Well, good day, everyone. Good Friday afternoon, evening, I think, to most of you guys. For me, it's still early day, early times, 12:30 in the afternoon. I thought I'll just show you in the time that we have what I am looking at. And please, if you've got any questions, just pop them in. So, got three indexes up: DAX 30, FTSE UK 100, and S&P 500. And I'll talk about each one of those. Now, interesting enough, it's looking like we're in some form of a bear channel on UK 100. I'm just going to put the channel in for you. And it's quite kind of fits in a little bit in there. But let's talk about what took place since morning. So that yellow block, first candle of the day, big bear candle, just breaking out of that tight trading range. Pre-market for the session, end of the Asian session was somewhere earlier on, so still not 24-hour market. So when I saw that big bear candle, it's an outside candle. Whenever I see a big outside candle, tails on top, tails below, I get a little bit suspicious, and I'm thinking, well, maybe we might get a failed breakout. So got this failed breakout, this candle here, and I decided to buy that. So that green block is where my decision to buy was, because I was just trading live. I got slippage. Don't blame the broker, because I think I was a little bit too slow. I should have just hit by the market pretty quicker than I did. I got filled up here. You can see this. I just dragged this up from MT4. This is the actual trade. And I was hoping to, well, when I took it from here, I was hoping to see if the bears would break above the high of the day. Even if we turned back a little bit later, we made a bit of profit, but we didn't get that. So the market turned back. And whenever I take a trade, I really want to see the trade start to work as quickly as possible. So, stop was down here, pulled my stop up, this little red line, and I got stopped out. Happy with the decision. That's the right decision. If the trade is not working, don't dilly-dally, because this might just keep going down. So, almost break even. Then waited to see what the bulls would do. And I wasn't prepared to buy here, which is right in the middle of the opening trading range. TTR open. I write these notes for myself on the charts, just so that when I'm flipping through the charts, I stay up to speed. And I'll show you when I go to DAX what happens. So when you come back, we tight trading range open, failed breakout below the first candle, reversal signal, buy. But when you got here, middle of the trading range, I don't want to do anything. It's the middle. I want to see a little bit more information. Bulls tried to accelerate it up, closed beneath the high of the day. Then with the bear candles, that's a problem for the bulls. Immediately, I'm thinking maybe we must jump in and see if we get an opportunity to go short. Then you got a beautiful gift here. Why do I call that a gift? Well, we have what I call a high, low 2. Okay, so the market has gone up. First attempt to come down, that's a low 1. We just broke beneath that candle. Then we came back and did another one. And that's a high probability setup. So you can see I took the trade there. Now I'm clear that we're in a tight trading range from the open. So this double bottom is a problem for me. So when we got here and the bulls failed to accelerate down, I pulled my stop down. I think I pulled up to here. And then I pulled it to 50% of this, and I got stopped out thinking that this double bottom will hold. But it didn't hold. So the double bottom failed, and we came back again. There's no ways I was going to sell here, because before all of this took place, we still had that low of the session, low of the day there. So you can't sell that, because it might just bounce. So I'm still thinking, maybe we'll get failed breakout beneath this double bottom, reversal, and we go up, and I'll buy again. But instead, bears were strong enough, breakout, follow through. Then we failed, and that just created problems for me. Now I have all sorts of issues: a double bottom, another low. So I decided to let it go in a bear channel, no problem with it. I am looking for two things. If the bulls are strong in this market, they have to accelerate up and get above the EMA. Thick blue line is a 10 EMA. And if they do get above that, I'll look for a higher low double bottom. I'll show you quickly on my charts, on my PowerPoint slides, what I mean by higher low double bottom that I'm looking for. So if the bulls break about, that's what I was thinking here. Bulls get up, come back, high low double bottom buy. Over here, didn't happen. So in a bear channel, and I'm just kind of trapped out of the market until we get that. Where would I sell? If the market comes up, we don't get the double bottom and we test these levels, that's where I'm looking to sell. Only problem, of course, is that within 2 hours, we have a slew of news. There's like Canadian news, but US news is the biggest. There is 3 things: non-farm payroll, there is unemployment, and average hours. The market is going to move. So I'm not too eager to carry on. Quick look at DAX. Now, DAX is interesting. DAX tight trading range open, nowhere for me to jump in right in the open. Unlike UK 100, we had an opportunity to buy. There's nowhere for me to buy. I just observed, made notes, tight trading range open, micro wedge bottom here. What's a micro wedge? It's 3 pushes down, but it's all happening within a few bars, 1, 2, 3. So this level has been defended quite strongly. So there's likely an opportunity to go up. We get a bull candle, but not a good enough signal. So wait, leave it. Get to the top of the test of the open of the day. That's this one in yellow here. Failed breakout, 1 second opportunity, decent enough trade, take it. So I sold here. And then when you go down here again, I'm thinking, oh, this is a strong level of support. The market might fail. So when you got a bull candle and going sideways, I decided to close the trade. So, no problem with this. Didn't keep selling off like happened with the UK 100. So now what I am thinking with DAX is that we might get a high low double bottom. Market goes up, comes back, gives me a double bottom, decent enough to buy. What I'm going to show you quickly is on my PowerPoint slides what I'm looking for when I'm saying I'm looking for a double bottom after a sell-off. And let's hope technology favors George. Now show you. Zoom show. Yeah, there you go. I hope you can see the PowerPoint slide. So, I mean, this is this is UK 100 from May. Now, this is what I'm looking for. Whether I get it or not is something else. Okay, bear sell-off. Like we've just seen now on DAX, we come back and the market turns. Now we have a bottom here. If we come back and we get a higher low double bottom, then, I mean, if we're going to trade this, because that might go far. Okay. But remember, it might fail like it happened on UK, and it might just keep going. But this is a pattern I'm looking for when I say I am looking for a higher low double bottom. So I will come back to the slide. Okay, so that's what I'm waiting for. I mean, if you can remember what I was showing, sell-off, we have a low here, pretty decent enough low, and it's within, I just put this there to mark that low. It's within the levels of support we've had. There was a previous low, Asian session. There is a low at the open, that tight trading range open. We try to break above it, to break below it, the macro wedge, 1, 2, 3. So 3 attempts, and we reverse it. So if we come back here and you get a double bottom and a decent enough signal, you've got to take that, put your stop down below and see what happens. Okay, UK 100 we've spoken about. S&P 500, what's interesting, I just left on the 15-minute chart. We're within the tight trading range from the Asian session. I'm doing nothing for the next couple of hours because this market is going to move with the US news. Undoubtedly, it's going to move. We don't know which direction. It might accelerate up or might reverse back, but it's going to move. Now, I want to show you something which, if you are looking at non-farm employment change, non-farm payrolls, I hope you'll find this useful. I've got some charts which I have kept track of in my PowerPoints. which I want to show you. And that might help you just plan your evening. If you're not going anywhere, it's worthwhile, even if you don't trade, to sit and look and see what happens. Okay, so I just call this is just George terminology, non-farm payroll plus 2 hours, non-farm employment plus 2 hours. So within 2 hours from the non-farm payroll, somewhere within there, you might get an opportunity to get into a trend that could be opposite to what you got. So if you get a huge bear breakout, and within the 2 hours, we get a reversal pattern setting up. This is a pretty neat classic reversal pattern. If you get that setting up, and the market starts to accelerate up, you got to find ways to jump in, either early in here, or if not, you wait for a breakout, pullback, and high one, and you jump in. You don't have to take all the trades, but if you take some, you can. So I just call that, I'm trying to think of a clever term. Red news plus 2 hours, but it's non-farm payroll plus 2 hours. Within the 2 hours, not at the end of the 2 hours. Within the 2 hours, there will be a setup. Sometimes it just comes after the 2 hours. Sometimes it might be in between. I'll show you a couple more. Okay, here's another one. Here, in this case, huge bull acceleration. And we then get a trend going the opposite direction. But in between the news, there was a tight trading range. This yellow block is the open of the US session. So while the 2 hours is down here, where you can just come back up for 2 hours and say, well, I'm going to see if there's ways to jump in the market. In this particular instance, at the open of the US markets, after that tight trend range, there's ways to look at this nested wedges, 1, 2, 3. There's all sorts of things that create this as a reversal pattern, which I haven't put in here. But with that bear candle at the open, you could take that trade, put your stop above here, and get acceleration in. You can get out on this reversal, wait for your 2 hours, and then try and find ways to get in. Here's another one. So this is German 30. So that's that was on the US markets, German 30. Huge sell-off. Okay, this is October, the other one was September. Huge sell-off. When the announcement comes, don't do anything. Wait for, remember I just said with red news, wait 3-4 candles. So there it goes, breakout, pull back. No need to jump in and scramble around. Decent enough reversal. If you want to jump in, you can jump in. But remember, you're trying to wait for this non-farm payroll plus 2 hours and waiting for cleaner things. Then we get a test of the 50% pullback of the breakout, of the bear breakout. At the US Open, you could jump in and take a trade here if you wanted to come and test this level, or just wait and see if you get something decent and clean within the 2 hours. Eventually, you get a wedge test, 1, 2, 3 of that low classic reversal pattern, and you can jump in. You don't have to take all of these trades. Just take one, put an appropriate stop. Does this work all the time? Well, there's a higher probability that you will get a move in one direction and they may be countered in another direction. Trying to find ways to jump in. So all I'm saying is when you get NFP, non-farm payrolls, this is where I've looked at, don't rush to jump in, wait for clarity. Things will become clear and say, oh, okay, now I recognize this and I can jump into this. Now this is S&P 500 itself, US market, huge sell-off, pull back to the 50% level at the US Open. I mean, we've got non-farm 230. An hour later, we've got the US Open. Then there's another news announcement, I think, at 4, ISM services. Eventually, we get wedge pullback, high, low, double bottom, and there is the 2 hours, but look at that, as decent as it comes. You take that, you put your stop down here. As soon as it starts to accelerate, move your stop up, and just limit your risk, and then see what happens. So, strategy, I haven't discussed it, in any other session. I just thought, hang on a second, we've moved to a Friday and there's NFP. Let me share it with the guys so that you can have something to look at. So thank you very much. I trust this new slot helps you and you enjoy it, and enjoy watching the markets with non-farm at least, and see what happens. If you're gonna jump in when it sets up, reduce your risk, manage it, or use full risk, doesn't matter, as long as you're comfortable with what you are doing. All right, guys, I appreciate it. And thank you very much for all your comments. Really, guys, I really appreciate it. And we shall see you again. All right. Bye-bye. Take care. Thanks, Marlon. Thank you, Marlon.